So today I wanted to make a brief video talking about two subjects. First of all, I wanted to talk about Bakkt and its upcoming release in the next couple of days. Also, I wanted to talk about what the Federal Reserve is doing in the repo market and how it might affect Bitcoin. So without further ado, this is iFinance. So let's get into it. So first of all, it is important to go very quickly over what exactly is Bakkt. So according to their marketing papers, Bakkt is bringing federally regulated price discovery to the Bitcoin markets. They'll do this through the emission of Bitcoin daily and monthly futures contracts that will have physical delivery. Now, as you might expect, the physical part is something that many analysts have focused on. So without a doubt, I think it is the most crucial aspect of Bakkt, because this means that right out of the gate, Bitcoin is going to face some buying pressure to secure these Bitcoin contracts. The question is how big is going to be the net demand proceeding from these future contracts. So I think that this will be the big question that ultimately decides whether or not Bitcoin is going to rise or fall in the coming weeks. It is worth mentioning that most people seem to be drawing parallels between the previous market top in Bitcoin and the CME Futures release. However, the critical difference is that those futures were settled in cash. Moreover, this is a crucial distinction because in the case of the CME Futures, they were simply an investment vehicle that allowed investors to bet on the price of Bitcoin. In other words, the CME contracts had no tangible effect on the supply and demand of Bitcoin itself. However, Bakkt future contracts will indeed have a tangible impact on the supply and demand dynamics of Bitcoin. Personally, I believe that in the long term, this will be ultimately a bullish factor for Bitcoin. Whether or not the price of Bitcoin rises on the precise date that these contracts start trading is irrelevant, in my view, because the main point is that there will be a point in which institutional sentiment on Bitcoin turns exceedingly bullish. So up until now, we haven't seen real institutional money flowing to the Bitcoin markets. And by institutional money, I am talking about hundreds of billions of dollars in demand. And so far, at best, we have seen small funds taking relatively small speculative positions on Bitcoin of around $100 million or less. This has been great so far, and don't get me wrong, it's a lot of money. But if we're going to go to the next leg higher, we're going to need the big boy money. Moreover, I believe Bitcoin futures will indeed open the floodgates in the long run for this type of institutional funds. So I wouldn't focus on what Bitcoin does after these contracts are released. Instead, I would say let's be patient and weigh the net effect a year from now. And moving on, I also wanted to touch very quickly on what is happening in the repo market. Many analysts have described the repo market as the plumbing of the financial system. In a way, it is a very accurate way of describing this market. After all, it is something somewhat obscure that mainly institutions and banks deal with daily. However, in many ways, this is where the real liquidity of the system resides. A good measure of how much liquidity is in the system is through the interest rate in this repo market. This is important because the recent spike in the repo market interest rates signals that the system is running out of liquidity. Note that the last time that this happened was during the 2008 financial crisis. So ultimately, this led to a credit crunch that brought the world economy to its knees. Naturally, to avoid a repeat of this, the Federal Reserve is ready to inject as much cash as it needs into the system. In other words, the Feds are willing to do whatever it takes to keep the system from crashing once again. So here is where it all ties up with Bitcoin. You see, whenever the Fed has to inject liquidity into the market, they mainly have to print money out of thin air. In other words, the Federal Reserve is going to inflate the money supply. And, as you might expect, this generates direct inflation pressure on the economy. Now, the problem is that, in theory, the Federal Reserve can inject unlimited amounts of money into the system and keep it from crashing. However, in the process, the dollar will likely suffer from inflation and maybe even hyperinflation. So guess what? Whenever we see inflation in the economy, real money tends to increase in value versus fiat. So it is very likely that in this scenario, the value of Bitcoin and gold would rise significantly. In my view, this would probably take the value of Bitcoin to an order of magnitude higher. So to summarize all of this, let's say that the more money that the Federal Reserve prints, the higher the price of Bitcoin should go. So, to give you an idea of how much money they have printed already, realize that in just 4 days of injecting liquidity into the system, the Federal Reserve has already printed roughly $300 billion. In other words, in only 4 days, the Federal Reserve has printed almost twice the value of the Bitcoin market cap. In fact, at the current pace, the Federal Reserve will probably have to print trillions of dollars to keep the system from crashing. The most important thing that you have to take away from this type of indiscriminate printing of money is that at some point, the rest of the world will start asking themselves why are they holding dollars if the US keeps devaluing their currency at their expense. Moreover, it is at this point that the potential collapse of the US dollar becomes entirely possible. So, it is at this point that the real value of Bitcoin and gold will shine. So I guess this is why I believe that Bitcoin will ultimately be one of the best investments and hedges against the recklessness of central banks across the world. That's it for today, guys. Thank you very much for watching. Don't forget to leave a like and subscribe. And with that, I will see you in the next video. Bye-bye.